Imagine walking into a corporate board meeting in Tokyo. The suits are tailored, the bowing is precise, and the business cards are exchanged with ritualistic reverence. But look closer at the man at the head of the table. He's missing the tip of his left pinky finger. This isn't just a thug. This is a registered executive of a multi-billion-dollar empire that operates in broad daylight, has fan magazines sold in convenience stores, and lists its headquarters in the phone book. You are looking at the Yakuza, and they are perhaps the only criminal organization in history that successfully rebranded organized crime as a legitimate business sector. But the terrifying part isn't their violence, it's their economics. They didn't just infiltrate the Japanese economy. For decades, they helped build it, managing construction crews, cleaning up nuclear disasters, and manipulating stock markets with a level of sophistication that would make Wall Street blush. This is the story of how the underworld went corporate, how they made billions, and how the Japanese government finally decided to bankrupt them. To understand the economics of the Yakuza, you have to throw away your understanding of the Italian mafia or Mexican cartels. Those groups live in the shadows. The Yakuza live in office buildings. For most of the 20th century, they were Ninkyo Dantai, chivalrous organizations. They pitched themselves as a necessary evil, a second police force that kept unorganized street crime in check. This social license allowed them to build a revenue engine that was shockingly diverse. In the post-war rubble of Japan, they started with the basics: gambling, prostitution, and amphetamines. But as Japan's economy skyrocketed in the 1980s, the Yakuza evolved. They realized that physical violence was messy and bad for margins. Economic violence, however, was scalable. This transition birthed the intellectual Yakuza, or Times Intelli Yakuza asterisk. They moved away from breaking kneecaps and started breaking balance sheets. Their most genius invention was the Times Sokaiya asterisk. These were corporate racketeers who would buy the minimum number of shares in a major company to gain entry to the shareholder meeting. They would then dig up dirt on the company executives' mistresses, tax evasion, embarrassing secrets, and threaten to humiliate them publicly during the meeting unless they were paid off. It was blackmail, industrialized. At their peak, Sokaiya times were so effective that Japanese corporations would schedule their shareholder meetings on the exact same day and time just to dilute the number of gangsters who could physically attend. This wasn't petty theft. It was a line item in corporate budgets. Major companies viewed payoffs to the Yakuza as a standard cost of doing business, labeled vaguely in ledgers as consulting fees. But the real money wasn't in blackmail. It was in real estate and construction. During the Japanese asset price bubble, the Yakuza became the ultimate middleman. If a developer wanted to build a mall, but an elderly couple refused to sell their small plot of land, the developer couldn't do much legally. Enter the Yakuza. They practiced Times jiage asterisk, or land sharking. They would harass the tenants, make noise all night, dump trash at the doorstep, or park ominous black vans out front until the owners sold. The developer got their land, and the Yakuza took a massive commission. It is estimated that at the height of the bubble, the Yakuza controlled a significant percentage of the construction, labor force, and the waste disposal industry. They were pouring the concrete of modern Japan. This integration went even deeper, literally into the core of the nation's energy. The Yakuza have long been rumored to supply labor for Japan's nuclear industry. Nuclear power plants rely on temporary contract workers for dangerous maintenance jobs where radiation exposure limits are strictly monitored. It's dirty, dangerous work that most citizens avoid. The Yakuza stepped in as labor brokers, recruiting debtors and the homeless, taking a cut of their wages and sending them into the reactors. When the Fukushima disaster happened, reports surfaced of Yakuza networks mobilizing to send cleanup crews into the exclusion zone. It highlights the terrifying symbiosis. The criminal syndicates were solving problems the government couldn't, cementing their economic utility. The structure that holds this economy together is a strict pyramid scheme. It is a franchise model. The Times Kumicho asterisk, or boss, sits at the top. Beneath him are the subsidiary bosses, and below them, the foot soldiers. Money flows exclusively upward. Unlike a typical salary job where you get paid by the boss, in the Yakuza, you pay for the privilege of the brand. A low-level member has to earn his own money, whether through selling drugs, running a protection racket, or fraud, and pay a monthly membership fee, or times Jonakin asterisk, to his superior. That superior takes a cut and passes the rest up the chain. This ensures the top bosses are insulated from the actual crimes while swimming in tax-free cash. It forces the lower-level members to be entrepreneurial, constantly inventing new scams, like the infamous or telephone scams where they impersonate grandchildren in distress to trick the elderly into wiring money. However, the golden age of Yakuza economics couldn't last forever. The turning point wasn't a gang war. It was a piece of paper. For decades, the police tolerated the Yakuza because they were useful for keeping order. But as the Cold War ended and the Yakuza became too deeply engaging in financial crimes, the government realized the necessary evil had become a parasite eating the host. In 1992, the Anti-Boryokudan Act was passed, designating them as violent groups. But the real death blow came in 2011 with the Organized Crime Exclusion Ordinances. These laws were brilliant because they didn't just attack the gangsters. They attacked the gangsters' economics. The laws made it illegal for any business to knowingly transact with a Yakuza member. Suddenly, a Yakuza boss couldn't open a bank account. He couldn't sign a lease for an apartment. He couldn't even get a cell phone contract or rent a car. If a dry cleaner cleaned a Yakuza member's suit, knowing who he was, the dry cleaner could be arrested or fined. It resulted in a civil death. The Yakuza were socially and economically excommunicated. The impact was immediate and devastating. Membership plummeted. In the early 60 seconds, there were over 180,000 members. Today, the numbers have dropped below 25,000 and are falling fast. The cool factor is gone. Young Japanese men don't want to join an organization that guarantees you can't own a credit card or buy a house. The average age of a Yakuza member is now over 50. You literally have geriatric gangsters who are struggling to pay their membership fees because the lucrative corporate hustles have dried up. This economic strangulation forced a split in the underworld. The smart money moved even further underground, away from the traditional families and into looser, unrecognizable networks often called Hangure. These are semi-organized groups that don't have the codes, the tattoos, or the offices, making them harder for the police to track. Meanwhile, the traditional Yakuza are left in a desperate state. We've seen reports of Yakuza members being arrested for stealing watermelons from fields or poaching sea cucumbers to sell to China because they are that cash poor. The distinct corporate criminality that defined Japan for 50 years is dying. Yet, we shouldn't be too quick to write the obituary. While the foot soldiers steal melons, the top echelon still holds massive hidden assets. They have diversified into legal ventures that are harder to trace: restaurants, trucking companies, and tech startups, often held through layers of shell companies and proxy owners. The visible Yakuza, the men with the missing fingers and the loud suits, are vanishing. But the capital they accumulated hasn't disappeared. It has just been laundered. The question for Japan now is no longer how to fight a criminal organization that operates in the open, but how to root out the money that has already been washed clean and absorbed into the legitimate economy. The Yakuza as a brand is bankrupt, but the Yakuza as an economic force has simply merged with the market.